Okay, thank you, everybody. I'm just getting us queued up to go live here on our various platforms. So let me share my screen and we'll get kicked off with our session on advantages of incorporating. So thank you for taking time out of your busy day to join us. As a little bit of housekeeping, as we give everyone just 2 more minutes before we kick off. If you are joining us live here on Zoom, you can post any questions that you have using the Q&A. I'll be looking at that throughout the webinar and doing my best to answering those as we go. And if I finish the webinar, I will then check the chat to see if I've missed anything. And for those of you who are joining us live on many of the social media platforms that we're airing this on, you can post your comments right in the live itself. And one of my colleagues will do their best to bring those questions over to our chat here live in Zoom. And of course, if you're ever interested in joining us live on the Zoom as well, you can check out our webinars, which are hosted on our website, cpa4it.ca/events. We do have just a few more minutes before we're scheduled to kick off. I guess just 1 more minute. Again, I want to thank you for taking the time out of your day to join us. And I'm excited to share this session on the advantages of incorporating, because we haven't done one of these sessions in quite a long time. And this used to be the bread and butter of the webinars. In fact, I think it was the very first webinar I did here at CPA4IT decades ago, when we used to do them physically in person. We used to do them down at Indigo stores and at various sessions around the city. And I'm excited to bring this webinar back, as I think it's really important to talk about the advantages of incorporating and work through any queries or questions you might have on the benefits of setting up your corporation. And with that, I'm actually just going to kick us off as soon as I can figure out how to get to the next slide. Oh, look, there's fancy motion. Isn't that cool? Be cooler if the slide would actually change. Come on. There we go. So first, let me just take a second to introduce ourselves and myself. So my name is Andrew Wall. I'm the managing partner here at CPA4IT. CPA4IT is an accounting firm with over 30 years of experience in accounting, corporate tax, personal tax, and corporation, and most importantly, audit representation. We've been doing this since my father founded the firm back in 1984. And over that entire period of time, we've been specializing specifically in service-based businesses, starting out primarily with the IT consultants, now serving realtors and doctors as well, who still all face the same fundamental issues. And what we do is we specialize in helping our clients organize their finances, create wealth, and transform that wealth into a legacy. So today's topic really is about helping you to organize your finances, and a little bit about creating wealth too, because there are some real financial benefits of incorporating a business. There's lots of reasons that people do choose to work with us, and we're very fortunate to have served tens of thousands of clients over the years. And that's because we've got streamlined accounting processes that really help you do more with your hard-earned money. And most importantly, those processes are externally audited, because we are an ISO 9001 firm, to make sure that we're constantly seeking never-ending improvement. And so that's why you'll see lots of other content that we do around artificial intelligence and cloud technology. We are big believers in always looking to the future to how we can do better for our customers. But I'm sure you guys aren't here for that. You guys are here for the meat of this session, which is really trying to figure out whether you should incorporate your business. So first, let's talk a little bit about sole proprietorship versus incorporation. For any of the people who are following on social media, I should say this is a Canadian-specific session. So we're not talking LLCs, S-corps, any of that stuff. We're talking Canadian corporations. And up here in Canada, we've got two forms of organization. Well, actually, there are three forms of organization. There's sole proprietorship, partnership, and incorporation. I'll tell you right now, take partnership off the table because either partner can legally bind the other partner, which is problematic. If you have someone that you want to partner with, you should never do that through a partnership. You should do that through an incorporation. You should have shareholders agreements, and you should have the right things in place to protect yourself, because it's very, very, very dangerous to go into a partnership, which is basically like a sole proprietorship split between two or more people. Now, a sole proprietorship, for those of you who aren't familiar with it, is sort of the simplest of businesses that you can do in Canada. So a sole proprietorship allows you to have an operating name. Unfortunately, it can't end in Inc., Corp., or incorporation or any of those legal endings, but you could have a company called John Jones Consulting, but just couldn't be John Jones Consulting Inc. And you could bill your customers, and you could even deduct expenses against that. And this becomes part of your personal tax return. So the only real advantage that you're going to get with a sole proprietorship is that it's going to come along with lower accounting fees. And that's simply because we're not filing a separate tax return for a separate legal entity. It is just a more complicated personal tax return. So it'll cost you more than if you were just an employee, but it won't cost you as much as if you were filing a whole separate return, which would be a T2 or a corporate tax return, which would be required with an incorporation. So an incorporation, on the other hand, is a separate legal entity. It has a birth, which is an articles of incorporation. It has a life, which is the tax returns you will file every single year, like birthdays. And then you will have a death, which is an article of dissolution if you ever wish to close down the corporation. Now, our belief here when we talk about helping our clients organize their finances, create wealth, and transform wealth into a legacy is using your corporation as a legacy. The goal is to build up wealth inside your corporation, get that to the point where it's generating enough of a nest egg that you're able to live off of the return of that nest egg or the annuity of that nest egg, so that you're never touching the principal, and the principal becomes a legacy that you pass on to the next generation or an important cause or whatever's important to you. So this separate legal entity comes with some advantages. It does have one disadvantage, which is the additional costs of setting it up, right? So you've got the additional costs of setting it up and the additional costs of maintaining it that you wouldn't have with a sole proprietorship. But there are some benefits, and I'm going to get to those in just 1 second. But our first question has actually already come through, which is just simply, Andrew, please close the pop-up. I don't know what pop-up that is. Hopefully I've done that. Okay, it's gone now. I think it was just the pop-up of my video. Thank you, Rachel. So I can continue on with my session, which was just talking about the advantages of a corporation. So first of all, there's limited liability. So limited liability means that if creditor comes after your corporation, they're limited to the assets of that corporation. They can't come after you personally. Now, there are a few exceptions to that, but this provides an advantage over a sole proprietorship, where if you are working, consulting through a sole proprietorship, you screw something up, you blow up a server, who knows what, and they sue you, they're actually able to sue you personally and come after your entire assets, which could be your home, your car, everything. Whereas if you were consulting through a corporation, they can only come after the assets held inside the corporation. And in fact, we've got some tax strategies that we use within a corporation, like setting up holding companies to help even minimize that further. So to get into the benefits, we've got another slide here. If I can get there. I don't know why this is so slow. There we go. So there's a number of benefits that come along with incorporating. And again, I would encourage people to check out some of our past webinars on the top 10 advanced tax strategies for incorporations, because this is where the rubber hits the road on why you should incorporate your business, is because there are some significant benefits of incorporating. Most importantly is the benefit of significantly reducing your taxes. Now, there's a caveat here. That benefit only exists if you actually have the ability to leave money inside of your corporation. So a corporation here in Ontario, and it's different across all provinces, but here in Ontario, pays tax on the first $500,000 of income at only 12.2%. versus the personal tax rate, if you're above 220,000, is going to be over 53%. So 53% versus 12.2%, right? There's a significant advantage of leaving money inside your corporation and paying tax at a lower tax rate. And what this allows you to do is build this big corporate retirement income where you've paid, only 12 cents on the dollar in tax, and it's invested and it's growing, and it's able to grow and compound substantially faster because you paid less tax. So if you paid 53 cents on the dollar and you only have 47 cents less versus 88 cents on the left, and you're investing that, the 88 cents is going to grow and compound substantially faster. But this only works if you're actually leaving money inside the corporation. So the question that we often get asked is, hey, at what dollar figure should I incorporate? At what hourly rate should I incorporate? And the reality is there is not a specific dollar figure at which you should incorporate. So you've got the soft non-financial benefits like limited liability and asset protection, which we talked about in the last section. But when we start talking about the financial advantages, a lot of this is going to come from your ability to leave money inside the corporation. And you might have two individuals both earning $100 an hour. One individual has another high income earning spouse and is able to save most of what they earn at their consulting job inside their corporation. And you might have another individual who's just got a high lifestyle expense. Maybe his kids are in university and, getting married, or he's got a lot of spending and he's pulling all that $200,000 or $100 an hour out of the corporation, in which case, there's not going to be a significant benefit to a corporation because you're taking that out. And if you're taking money out of your corporation, it's going to become either a salary or a dividend, and you're going to pay tax on it at the same rates that you would have paid inside your sole proprietorship. So really the key to figuring out when an incorporation makes sense is figuring out, do you have enough money to leave inside your corporation? And if you can save more than $10,000 a year, then the financial advantages of having the corporation are going to exceed the costs associated with setting up that corporation and maintaining it on an ongoing basis. But if you do have the ability to leave money inside your corporation, like I said, you're only paying 12.2%. The goal is to save that up and build this big corporate retirement fund so that you can either take a tax-free loan, which is another advantage that you've got inside of a corporation. So you can do loans for the purchase of a car. You can do loans for the purchase of a home. You can do single purpose loans for no express reason, although there's some caveats that that's limited to only 1 year and it can only happen every other year. Again, go check our other webinars where we go into this in more detail. Or you can save that out to receive tax-free retirement dividends. By keeping you below certain tax thresholds, you'll be able to pull this money out in retirement tax-free, or to do income splitting and income smoothing. And so the key here with reducing taxes is this idea of income smoothing. And what we're trying to do is smooth the income over as many periods as possible and prolong that as many years as possible, so that you pay less overall tax. Because of the marginal tax system, 1 year of $200,000 of a salary versus 4 years of $50,000, you'll pay a lot more tax in that 1 year of $200,000, right? But we do have our actual real first question that's come through already. How much tax do I pay if I receive dividends versus the salary, and how would that work? Great question. And again, we talk about this in more detail, and I think we've even got some slides here in case we wanted to talk about it. But fundamentally, there's no tax advantage of choosing a dividend over a salary. And that's because of what we call the theory of integration. When you integrate corporate and personal taxes together on a dividend, the taxes would be the same as if you were to take that as a salary. And let me step back a second to explain that a little bit more. With a dividend, dividends come out of retained earnings. So a corporation has top line revenue, and then it has expenses. You subtract your expenses to get your net income. The net income after taxes becomes retained earnings. Now, if you take a salary, the salary is just another expense, which reduces the net income of the corporation. And because of that, the individual who receives the salary pays the full personal tax rate. Whereas a dividend, because it comes out of retained earnings, which have been taxed at the corporate tax rate already, the individual or the shareholder who receives the dividend gets a dividend tax credit to offset the taxes that the corporation has already paid. But the theory of integration is designed to give you no financial advantage of choosing one over the other. Now, there are some reasons that we would choose one over the other, but those more tie into the profitability of the firm. Because obviously, if you have no income, like in a retirement year, and you take an expense, you're going to create a loss that you might not be able to use, which is why you usually, during your income earning years, will take a salary, which will build up RSP room and CPP room. And again, we've got a whole session on, salary versus dividend and, payroll deductions and stuff like that. But it's going to build up some CPP room for you, and some RSP room for you. And then once you switch into retirement years, you're no longer consulting and your corporation is now more of a holding company than an operating company. You'll begin pulling your retirement income out of the corporation using dividends, which will give you a whole bunch of tax advantages like recoverable dividend taxes and a whole bunch of other things that, again, we're not going to be able to go in today. So hopefully that answers your question. And we do have another one that's come in. I've heard that there is sometimes a dollar rate amount where incorporation is more beneficial than the sole prop. And I think I sort of just answered that before, which is there is no magic dollar figure that it makes sense. It really is more tied to your ability to leave money or retain money inside your corporation. And I would say that that dollar figure really is, if you have the ability to leave, $10,000 or more inside your corporation, then you're going to get a financial benefit of incorporating. But keep in mind that in addition to the financial benefits, you've got non-financial benefits, like the ability to protect personal assets, as well as the fact that there are just not as many contracts available to sole proprietorships as there are in corporations, because a lot of end clients will insist that they work on a corp-to-corp relationship to sort of better protect their own individual risk, right? Because there's some more risk associated with them working with a sole prop than there is with an incorporated entity. I'm not going to go into that today, but suffice it to say that there are far more end clients willing to work with incorporated entities than there are sole proprietors. And many of them will flat out say, hey, if you want to work with us, it's either as an incorporated contractor or as an employee. You take it, you choose. And like I said, there are a whole bunch more additional financial tax strategies available to corporations that are just simply not available to sole proprietorships. And again, if you want to go into the details of those, I encourage you to go back and check out some of our past webinars, including one of my favorites, which is the top 10 advanced tax strategies for corporations. But if I can get these slides to work, I don't know why these slides are so slow on my computer today. I'm hoping it'll actually click. But the goal is to talk to you about some of the common mistakes that people make when they incorporate. If I can just get to that slide. There we go. So these are the top 5 mistakes that we've seen over the years in people incorporating. Hey, can your company legally incorporate a company in any province in Canada? We can do quite a few provinces. We can't do every single province. Rachel, would you be able to maybe chime in and chat and let me know? I know there's some provinces we do not do. We can do federal incorporations. We can do provincial incorporations in many of the different provinces. We do, generally speaking, recommend provincial. There we are. Thank you, Rachel. You're the best. She says the only province we cannot do is Quebec. So there you go. So we can do every other province for those looking to get assistance with incorporation. And we'll go through some of our pricing as well, focusing specifically here on the Ontario. There are some slightly different pricing for other provinces, but we'll get through that in a minute. But before we do, I'd like to, again, share with you some of the top 5 mistakes most people make when incorporating. And this is one of the things, one of my pet peeves is they have made it too easy for people to go online and incorporate themselves. And the reason that's such a pet peeve is because people who do this set up their corporation the way I install software. Yes, 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 without knowing and understanding what they're saying yes to. And this often results in problems that we have to fix, things that we have to do after the fact that truthfully cost you more for us to fix than it would have for us to do it right in the first place. And we've got some amazing offers. In fact, we've even got, if you do choose to retain us for the accounting services, we've got a no cost, no fee incorporation available. So it's not going to cost you anything out of pocket if you're doing the accounting services with us. So, I strongly discourage you from doing it yourself. But if you're going to do it yourself, don't make these mistakes. So first of all, the most common mistake is to include your spouse as a director. So unless your spouse is going to be working as an independent contractor as well, because some contracts will require you to show that you are a director of your corporation and will limit the consulting to be only being done by the directors of the corporation. This is just so that you don't go and farm out the contract to a subcontractor, potentially overseas. But outside of that, your spouse should not be a director of the corporation, because by setting them up as a director of the corporation, they're getting no additional advantage, but they are getting a responsibility, a fiduciary responsibility to the corporation, that if anyone were to ever come after them, there's some fiduciary responsibility that directors have with your corporation, primarily around tax and other things. So that's a common mistake that we see made. We also see people not realizing that in addition to the articles of incorporation, that you actually need to prepare initial minutes and a corporate minute book for your corporation. These are required documents. If you're ever audited, you will need to provide these to the auditor in many situations. And when you're going to do one of these online tools, they're not telling you that you need to prepare articles of incorporation, that you need to prepare the minutes and the initial minutes. They're just giving you the price on the bare minimum that you need to roll out your business tomorrow, which is your articles of incorporation. The other common mistake we see is improperly structuring your corporation. And this could be as simple as the shareholders of the corporation. Who are you setting up as shareholders? Are there common shares versus preferred shares? And we've got some structures and some ways that we have been doing that help you get the most out of your structure of your corporation. But it could also mean structure of the corporation from the perspective of holding companies, operating companies. You might have a complex organizational structure as well as a complex share structure. And that's the biggest mistake that we see over and over again, is people basically doing a poor structure within their corporation because they've simply done it, like I said, the way I install software, which is just saying yes, 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 yes. So we've got our next question coming through, which says, so can a spouse and other family members in the corporation hold other positions other than a director, like a secretary? Again, I wouldn't encourage it. There's no advantage to doing it. Yes, there are other, so they're all director positions, and there's president, vice president, secretary, treasurer, but you can also just make one person all of the positions, which is usually what we recommend, as opposed to bringing in all your family members. The only reason that you might include other family members if they're not consulting is if you're worried about mind management and control. And what I mean by that is if you want to be taxed in a specific province, like particularly if you have someone who's going to be out of country, if you want to remain a CCPC, which is a Canadian controlled private corporation, you have to have mind management and control of the corporation here inside of the country, which means more than 50% of the directors, more than 50% of the shareholders reside here in Canada. So that might be the only exception to that. So the other thing, which is, an often overlooked thing, is opting to use a numbered company rather than a named company. This resolves around an issue primarily around the IT industry, not so much for the doctors and the realtors. Is an issue called personal service corporation. Again, we just did a whole webinar on personal service corporation risk and what that is all about. But using a numbered company is strongly discouraged because businesses don't interact with numbered companies. They interact with other businesses. And from a personal service business, the more you look and act like a business, the more you'll be treated like a business. I would say that fundamentally applies to any type of business that you are doing. If you're worried about having something generic because you might be doing multiple streams of business, you can actually have multiple operating names within a business, which is a better structure than going with a numbered company. And then last, but certainly not least, is not hiring a professional. Again, I've seen way too many people make the same mistakes over and over again. And they come to us and they don't have the minutes and they've done the corporate structure wrong, and they've limited their spouse, and we have to go back in and fix it all. And we're charging you more than what we would have charged you to get it right in the first place. So we got another question here. Does the wife could be a shareholder, and can she get the salary? So your spouse can be a shareholder. Usually we would set, well, there's different reasons for setting up the spouse as either the common shareholder or the preferred shareholder. Probably not going to get into that now because it's a bit more of an asset protection thing. But yes, your wife can be a shareholder of your corporation, and she can also get a salary. Now, can she get a dividend? That is dependent on, thanks to some new, what they call TOSI rules, tax on split income rules. It depends on how actively involved she is in the business, or your age. Once you hit 65 years of age, you can income split through dividends with your spouse. But prior to that, it is subject to their involvement in the business and specific rules around TOSI or tax on split income. So if you want to do some research on TOSI, you can figure that out. Can my spouse take my company if my spouse is a shareholder? Good question. And again, caveat here, I'm not a lawyer, but from my years of experience, and the legal advice that we've got in the past, no. So you are protected via common law. So even if, and what is not uncommon is to maybe put the assets of the corporation under your spouse's name. The reason that we do that is because you, as the actual contractor on site, still bear some risk. So the idea is put all the risk in your name and all the assets under your spouse's name, including the ownership of the corporation, which means the creditors can't flow through that way. But your wife can't walk away from the property because you're protected via common law, which protects your wife from just taking all your assets and also protects her from you taking all the assets as well. Again, speak with a professional on that. Yeah, so a corporation is an asset that falls under the Family Law Act, so it's separated and split 50-50 is what my colleague Rachel is saying, which is aligned with my knowledge and experience. And with that, that sort of brings us to our next slide. Again, if my slides will transition, woohoo! Which is sort of the top 5 incorporation FAQs. So why should I incorporate? I think we somewhat covered that. Is really the reason you should incorporate is if, one, you have a contract that requires you to do it, i.e. you're not going to get the contract position if you don't, or 2, you're going to get a financial benefit out of doing it, or 3rd, there is some soft non-financial benefits that you're going to receive that are like asset protection, limited liability, that in your perception outweigh the costs of incorporating. Because there are costs, like I said, to setting up the corporation. There are costs to filing the return. There are costs to closing it if you ever want to do that. The other question is whether you should incorporate provincially or federally. This used to be a slam dunk no-brainer, where we would say incorporate provincially, because even though the initial cost up front was a little bit higher, the initial upfront cost was quickly outweighed by the fact that in the past you used to have to register your federally incorporated incorporations in the province every single year, and there was a cost associated with it, and you didn't have to do that with a provincial incorporation. Unfortunately, now you have to do it with provincial incorporations as well, which takes away that advantage. However, generally speaking, we still recommend a provincial over a federal, although we'll do a federal as well, because of the speed at which you can incorporate, and the hiccups around the naming conventions and the naming requirements. That brings some additional cost and headaches along with that if you choose to go the federal route. Should I hire a professional to set up my corporation? Absolutely. I will repeat this over and over again. If you are going to incorporate, you should use a professional or know exactly what you're doing, because I'm telling you from years of experience, it costs more to fix than it does to get it right. How long does it take to get incorporated? So we can have your articles of incorporation turned around if it's a rush in as fast as 24 hours. You'll have to reach out to our team, let them know it's a rush, and we'll do our best to accommodate that, barring any holidays or unusual circumstances like tax deadlines. But it does take a little bit longer to get your GST number, your minutes, a whole bunch of the other additional pieces that come along with it. So that normally takes about another 5 business days or so to get all of those final pieces in pie. But if you need the articles of incorporation to sign a contract tomorrow, we can make that happen. Reach out to our team. We can still get you set up correctly without having to do that. The next question is, how much does it cost? And interestingly enough, I should have the incorporation packages as the next slide, which we don't. So we've got 3 different packages available, starting at $495. This is based off of the provincial incorporation here in Ontario. And you can see what's included, what's not included. The full package is $795. And as Rachel just messaged me, she said, most importantly, the cost, it can be free, absolutely free, no charge at all if you do retain us for the accounting services as well. So if you're just looking for a cheap, no cost or no fee incorporation, starts at $495, which is far cheaper than going to a lawyer. It is sort of a bit of a loss leader for us to try and get the opportunity to pitch the accounting services. But if you know you're going to sign up for the accounting services with us, you might as well sign up for the accounting services and get the incorporation completely free of charge. We do also have some other packages that include some additional services like letterhead and business cards and stuff like that as well. I'm going to step back for a second to also share with you a couple other tools that we have available on our website under our resources section. So we've got a sole proprietor versus incorporation calculator, and we have a contract versus permanent calculator, which compares a contract incorporation position versus an employee in a permanent position. We've built these over the years because this is the question that most people want to know is, hey, the bottom line, what's the financial advantage that I'm going to have by choosing incorporation over sole proprietorship or incorporation over a permanent role? It does look like we got another question that's come through here, which is, can you transfer ownership to other family members? The answer is yes. Depending upon the retained earnings determines the complexity. There are ways to do asset freezes and asset rollovers. But the bottom line, the short answer is yes, you can transfer ownership to another family member depending upon, like I said, if you're considering doing that, talk to your accounting professional, but the bottom line is yes. Got another question here. Does this consider as a gift and you need to pay taxes? So, I mean, it depends on the individual situation, depends on what the value of the corporation is, depends how you structure it, whether it's an asset freeze or an asset rollover. The bottom line is there's a number of different ways to do it. I can tell you when I purchased my father's business, it was not tax-free event, but it was a very different situation where we had a corporation that had assets that had a value. So a lot depends on where you are. We've got another question here. Do we also handle estate planning? We don't actually do estate planning, but we do work with lawyers who assist with estate planning. So what we consider ourselves to be is sort of like the financial quarterback. So we'll work with lawyers, with insurance agents, with financial planners, to sort of coordinate this whole goal to help you organize your finances, create wealth, and transform wealth into a legacy. We ourselves are not estate planners, but like I said, we do work with them. Happy to work with yours if you have one, or to provide a referral or recommendation if you don't. So that's our sole prop versus incorporation calculator, contract versus perm. We have covered our prices. And that's the Alberta and PC pricing, which is a little bit more. And so, if it's worthwhile, we'll maybe do a very brief overview of strategies that you can use to reduce your overall tax bill and how you can actually pay less tax. Sort of what deductions you can claim, what tax credits, and of course, our services that are designed to help you with that. So the first and most important step in that is to make sure that you are claiming as many deductible business expenses as you possibly can, because every dollar that you claim as a deductible business expense is a dollar that you don't pay tax on. You don't pay corporate tax, you don't pay personal tax, you pay zero tax. And sorry, another question here, Sharon. Yes, we do offer a free initial consultation. If you go to our website, cpa4it.ca, and click free initial consultation, you can book using our online calendar. Yes, happy to offer you a free consultation. Love that question. One of my favorite questions. And so, deducting business expenses is sort of the first step to reducing your overall tax bill. The key here is we're not telling you to go out and spend money so that you can deduct it. The key here is what we want to do is look at your life and see how we can make as much of the money you're spending a justifiable business expense. And there are 3 criteria for a justifiable business expense. It has to not be specifically disallowed by the Income Tax Act. And even though it's a lengthy document, it doesn't actually disallow that many things. It has to be reasonable, and it has to have the ability to help your business earn income. Those last 2 are subjective, open to interpretation, and we want you to interpret that as aggressively as you possibly can, and to do everything you can to deduct as much of what you're spending money on as you possibly can. And if you're coming from a former full-time position, what you will quickly discover is there are lots of things that you were spending money on that you were spending the money on as an employee that weren't deductible as an employee, that the minute you incorporate are now deductible business expenses. Think about your cell phone, your internet, part of your home office expenses. There's a laundry list of expenses, as you can see on the screen here, of things that you can claim as far as business expenses inside your corporation. There are also a number of tax credits available for both corporations and individuals, and things that you can do, and a whole bunch of tax strategies that we talked about for corporations, things like holding companies, and again, go to our top 10 tax strategies. I'm not going to go through all 10 of those now, but there's a whole bunch of strategies available to corporations to help you further mitigate and reduce tax. We do just have finally some important tax deadlines that you do need to be aware of. Obviously, most people are familiar with the personal tax deadlines of April 30th. Some of you might know that you actually have till June 15th if you're a sole proprietor. You still need to pay by April 30th, but you don't have to file by June 15th, which I find comical because only our government can expect you to know what to pay before they expect you to prepare the return to know what to pay. But we see that also with corporate taxes as well. It's funny because the corporate income tax deadline, they expect you to pay 3 months after your year end, but not file until 6 months after your year end. Now HST, now it's clicking when I don't want it to. Can I go back? Yes, thank you. The HST, which by the way, many of you may not realize, you can make money with HST. So as soon as you incorporate, you want to register for HST and you want to register for the quick method of HST, assuming that you're a service-based professional, because unlike a manufacturing or retail business who doesn't have cost of goods sold, the amount of ITCs that you have will be less, and ITCs are input tax credits, or the HST that you've spent on your expenses will be less than what the calculated amount would be using the quick method. So definitely advantageous to get the HST set up immediately and get set up for the quick method of HST. And don't forget to register for annual filing, and to make sure that your year end for the GST return matches that of your corporation, because you may not you may not actually have a December 31st year end for your corporation. You can choose any year, any day throughout the calendar year, up to 1 year and 1 week from the date you incorporate. We do obviously recommend choosing a month end for make bookkeeping a lot easier. And there are some advantages of different months. Again, speak to your professional. Another question here, follow-up question to the ICs. Do you have an office, agent, or affiliate in BC? We don't have an office anywhere anymore. I'm working from home now. Ever since COVID, we have been a 100% virtual. We technically have an office where you can physically go and drop stuff off in Ontario. We do not have a virtual office in BC at the moment. But we still can process the BC consultations and incorporations through our virtual services. But unfortunately, we are no longer a brick and mortar firm. And then we got one more question. 2024 is a leap year, so deadlines might be out of date. Yes, good point. And we've talked a little bit about salaries versus dividends. Tax efficiency and maximizing your take-home pay is determined a lot by your ability to leave money in the corporation, as we said earlier. There's a whole bunch more into the future planning that goes into this with RSPs, TFSAs, and other investments. And again, we're not going to be able to cover all that today, but we've got webinars on all of this. I know it's the time of year right now that you guys are thinking about, should I put some money in my RSPs? Should I put some money in my TFSAs? Should I leave money inside your corporation? Again, we just did a webinar. Go check our YouTube channel. Go check our social media to see. And we've got more ones coming down the road as well, where we talk about that very exact topic and explain the pros and cons of the different investment vehicles, including whether you should invest in your RSP versus your corporation. And T4 versus T5. This is, again, salary versus contract, which we sort of covered earlier on in the session. Reducing PSB, I'm not going to go into that today because we've got that in a much more detailed strategy. But what PSB is in a nutshell is the risk that you will be deemed to be effectively an employee rather than an independent contractor. So because you're incorporated, you cannot be deemed to be an employee, but you can be deemed to be a personal service business, which basically eliminates the tax advantage of the low tax rate of 12.2%. You pay a higher tax rate. It denies a whole bunch of expense categories that you can't claim anymore, and they could be potentially looking at multiple years. Again, go check out our past webinar where we discuss what it is, the risk factors, and the top 10 strategies of mitigating that as well. And then if you are interested in retaining or choosing our services, we do have some corporate tax packages available. They start at $225 a month and go up from there depending upon what your individual needs are. Our $350 and $600 a month packages do include bookkeeping. And those are also what we call fixed fee packages that are limited in scope, but fixed in a budget, whereas the basic package is not limited in scope and it's not limited in budget. And by the way, if you're doing your own bookkeeping, that's the only way we do it, because some people do a great job of bookkeeping and others do not. But again, if you've got more questions, come reach out and we'll be happy to offer you a free initial consultation. And with that, I just want to close on really the top 10 reasons, top 5 reasons that people do choose to work with our firm, which is because we do offer that free initial consultation with no risk, no obligation. We are turnkey, which means we can do both the incorporation, the accounting, the dissolution. We've got the team of advisors to work with as far as financial advisors, estate planners, all of those tools. We also offer benchmarking analysis, which is a proprietary tool where we show you how you compare to the average and the median in our database, which helps us to quickly identify risks where you're above average and opportunities where you're below average so that we can maximize your deductions and minimize your taxes. And then we back that up with our audit representation protection, which means if you are ever audited for any of the work that we've prepared for you, we'll represent you up until the third and final stages of appeals at no additional costs. And last but certainly not least is our decades of experience and our industry-specific knowledge that we have by working exclusively in service-based businesses and knowing and understanding the issues that you as owner-managed businesses face. And yes, now in addition to IT consultants, we do service realtors and doctors. And although you are in completely different professions, you actually face a lot of the very same issues for helping you organize your finances, create wealth, and transform wealth into a legacy. And with that, I will open it up for a little bit more FAQ. And thank you guys for taking the time to join us. And again, tell you can reach out and connect with us on any of the social media platforms of your choice. I think we just need to add LinkedIn to this platform. I'm not sure why we don't, but we'll just add that in here as well, where you can find me under Small Business Accountant. But we're active on all the social media channels. In fact, this is streaming live right now on every one of these social media channels. Actually, not Instagram. It's not streaming on Instagram, but it is streaming live on Facebook, YouTube, and Twitter as we speak. So thank you guys for taking time out of your day. Hopefully you guys found this helpful and informative. Again, we do offer new sessions every 2 weeks, as well as on top of that, we also have our AI podcast that we do every Friday. So come check us out online. Do us a favor, like, share, follow, repost. And thank you guys again. Appreciate it. Got lots of thanks coming through in the live chat. And I'm glad you found it helpful. And if there are no other questions, I'll just give everyone back a bit more of their time. Thanks, Rich. Bye for now, everybody. Have a great one.